Hello, hello, hello. Happy Tuesday afternoon or morning, depending on where you're at. Currently 11:03 a.m. Eastern Standard Time. Today's report is going to be entirely focused on one of my favorite particular setups. We're looking through recent IPOs in the last 2 to 3 years that are now starting to break to the upside into new 52-week highs. This particular scan for us this year has consistently given us some of the biggest winners that we've had. During certain market conditions, recent IPOs tend to be some of the biggest potential gainers simply because the market does not know what to price them at yet. Price equilibrium is still up for debate. And so as bull market tendencies go and pushes everything up and to the right, these recent IPOs don't have any previous price action to the left-hand side of the chart that may influence short-term supply, meaning some resistance. We love this particular scan this year for sure, because once again, some of the biggest wins this year have come directly from this scan. So we're going to go ahead and we're going to actually look at the scan itself. We're going to pick through some of this stuff. We're going to talk about some of the trades that we took earlier today and some of the trades that we're currently in right now. If you have any questions, feel free. While I'm talking through this, I'll try to answer them as I go through if they make sense. If not, I'll hold them off until the end. So first things first, there's a list of 21 stocks here. And remember, inside of TTI, we are laser focused not only on having or owning winning trades, but we want to own the best trades. Simply winning is not good enough. We want to win holding the best possible trade that we can. The outperformance from number 1 to even number 2 is generally huge over a long time period. So always we're focused on the winners here. One way that we do that is by introducing liquidity and volume, momentum, and proximity to 52-week highs. So what we're looking at here is a list of stocks, 2 to 3 year IPO that are now breaking out into yearly highs and in some instances, all-time highs. Give me 1 second. Shut the door so our windows don't listen. Neighbor's dog barking. Here we go. Immediately, if you're inside of TTI, you know that we have traded or currently have a position in a number of these stocks. It's never a bad thing to own stocks breaking out into 52-week highs. Burn that into your brain. It is never a bad idea to own stocks breaking out into 52-week highs. The first one that comes to our attention is obviously Birkenstock. Now, this is a stock that we have traded multiple times this year, continuing to break out in towards that 52-week high, all-time high. We do not have a current position in Birkenstock, but potentially we could be opening on up here as it retests that 62 area pivot. We've been able to successfully wait for a continuation play on a pullback here, and you'll be able to potentially own it. If you can't read it because it's too small, try to enlarge it just slightly. If you're inside of TTI on the market research side, you can always click it to enlarge it as well. So Birkenstock, number 1 stock on the list earlier this morning, currently finding a base up around 62 bucks. This is a very simple play, not necessarily the easiest play, but a simple play. Birkenstock has worked for us for a majority of the year. We go back and look at that future leaders. Go ahead and see if I can, there we go. It should look a little bit better now. The next stock on the list that we actually initiated on earlier today was ONON. We already have a position in ONON. We bought it back in May. It was a free trade that we were able to turn free relatively quickly and is now currently up over 200%. Those are September contracts, so we have just a couple of weeks left to hold those things. We're up into 52-week highs. It's completely up to you how you want to handle the selling process of that play. Chipping off on big up days like today, probably not a bad idea. Now, as of this morning, we were looking at buying any sort of weakness or pullback to the 44.5 level. For those of you that are newer to TTI, we love buying pullbacks after breakouts occur. Most traders will assume that a breakout a stock that pulls back post breakout is going to be a failed breakout and they will be looking to close their position. We have the stats to prove that high volume breakouts pull back over 60% of the time over the course 2 to 3 days after the original breakout. So what does that mean for us? We do not have to chase the breakout. We can simply buy the pullback. We can plan to buy it. Also, if you're trading options, you probably know that buying calls or call debit spreads when the price of the underlying asset is coming down results in a greatly reduced price in that call or call debit spread. Meaning we are paying less for the same trade that the previous guy bought on the breakout. We're both expecting this to continue to break out, but we were paying sometimes up to 50% less, which juices our risk to reward. So ON, we opened up again another position, the January trade. See if we can flip over here and find the trade ideas tab. The January trade, we were looking at adding in. Oops, it's actually on the trade report here. We want to own more ON on a pullback to 44.5 with a stop loss on a close below 41.5, and we're looking to grab those January 17th, 2025 $55 calls. We didn't want to pay more than $2 or $2.05 for them. Not often do we go and enter a trade and it just immediately takes off for us. We're generally looking for, 45 to 180 days out. For ON, this trade immediately started working for us. Those January $55 calls are now trading for just over $240. So we have a great head start here, about a 20 to 25%. I have no idea where we're going to be at the end of the day, but a 20 to 25% move in the matter of about an hour and a half for a swing trader targeting January's is very good. High expectations for ON to continue, and an opportunity for us to own this risk-free relatively soon. So good job for those of you that were able to snipe the entry here on ON earlier. And for those of you that are still holding that May contract, you're up relatively large now, up over 200% on that May contract. As we continue to make our way through this report, you'll notice that we're already long a couple of these names. We've initiated on them multiple times throughout the year, but recently as well. PHIN. One thing I want you to notice is that a lot of these stocks continue to show up on the same report week over week. And that's not on accident. It's because these are the strongest stocks in this part of the market. Whatever universe we're scanning through, if you continue to see the same stock or stocks on that list, specifically if we are filtering by 52-week highs, it's probably not a bad idea to own some of those stocks. They are probably moving in the direction that you want. PHIN earlier this morning, or actually yesterday, closed at an all-time high. This was a shares trade for us, continuing to work. We originally entered it at $35, currently trading 48. So a little bit slower of a mover. Has picked up ADR since breaking out, but continues to work for us. The next stock that we already have a position in is VLTO. This is another auto parts related store or stock. VLTO, 1% away from 52-week highs as of this morning, basing right underneath our next profit target at around 112.50. If you look at FIN and you look at VLTO and you say to yourself, they look relatively the same, it's because they are part of the same industry group. One thing that you will notice once you join TTI is how much emphasis we put on sectors and industry groups. It matters a lot. As a matter of fact, we're running a free webinar on Thursday, 7 p.m. Eastern Standard Time, that talks about our entire top-down approach and how much emphasis we put on sector and industry strength. VLTO and FIN are part of the same industry group. They're around the same market cap, so it shouldn't surprise you that in this type of environment, they are moving relatively the same. Originally bought this off the 83.5 breakout, currently trading over $110. Next price target up 112.50. We'll probably be looking to enter more VLTO once it's had an opportunity to consolidate there up at the 112.50. Reasonable to assume that as price hits these fib extensions, people look to take some profit. We want to make sure that VLTO is going to continue and flip that level from a resistance to a support. If it does, we'll be looking to get more long VLTO. We want to add into our winners. Winning stocks tend to win for an extended period of time. There's no reason to limit that trade to a small portion of the trend if all of the intangibles are telling us that there's a good chance that the trend is going to continue. So good job, VLTO. Once again, on this list, these stocks have been here all year. PHIN, VLTO, SharkNinja, AHR. These are stocks that have been here all year. The next stock that we initiated on today was PRM, Perimeter Solutions. It's a specialty chemicals company out of Switzerland. We like this particular setup for many reasons, but more so because once we get up and over that 12-ish area, that 11.5 area that we're looking to play, look at the lack of volume on the right-hand side, that VRVP indicator telling us that, yeah, prices traded up here when it IPO'd back in 2021, but how many shares actually exchanged hands? Is there reason to expect there's going to be significant overhead supply there? Probably not. There's not a whole lot. As a matter of fact, volume falls off dramatically up and over 11.5 or 12, which is why we're targeting on a close above 11.5. We want to own more PRM. Or not more. We want to own PRM. We don't own this yet. Great illustration of upward sloping 200-day moving average. Price is trading over it. Paul Tudor Jones tells us that's a pretty good winning combination. I trust him. Bullish momentum regime since Q3 of 2023. Bulls have been in control of PRM for the last 9 to 10 months. This is not a stock you want to bet against. This is a stock you want to own. 5.79 ADR, a great shares trading vehicle. Long above 11.5, we're targeting $17. We have a stop somewhere around $10. Risk to reward on this, 5 to 5.5 to 1, meaning for every dollar you're risking, you're looking to make 5.5. These are the types of setups you want to take. You will not find many of these types of setups out in the wild. Most people are trying to scrounge up 2 to 1 and 3 to 1, and here we have a 5.5 to 1 staring at us that makes sense from a technical standpoint. So once again, PRM, a Swiss chemicals-based company breaking out into 52-week highs. C1, Clearwater Analytics. Here's one that we've initiated on already for shares. We like it above 23.5. It's doing its thing up here. We're up slightly in this position. Bullish momentum regime, upward sloping 200-day moving average, 3.65 ADR. And just like PRM, a significant lack of volume after it IPO'd in 2021. If you don't have your volume indicator on the right, the VRVP, you would never know that there was not a lot of shares being exchanged up here. So you would reasonably look at this and expect an all-time high breakout to be your entry. For us, it doesn't make sense to wait for the all-time high because we know that when we're up there, there's not going to be a lot of bag holders up there looking to sell into it. So let's front run the all-time high breakout. It's working for us. We want to be long above 23.5 with the price target up near $30 to $31. This pulls back to 23.5. There might be an opportunity to add in from a shares perspective, given our BRB entry. But as of right now, it's just working. So we're going to go ahead and continue to sit in this trade. Nubank. Trade that we've had on the books for a long time. We have gone multiple tranches in this trade. The Septembers are now in profit for us. The Octobers are up over 200%. And for those of you that went really far out into the Decembers and Januaries, or I think it was just Januaries, this is nearing a free trade for us. Those Octobers are 50 cents away from in the money. The Septembers are 50 cents in the money. The Januaries are still $2 away. Really good example of owning a strong stock in an uptrend and letting the market do its thing. We're in a bull market. We were just talking about that inside of the Discord earlier today. Not going to glorify bad trades, but what I will tell you is we're in a bull market. Primary trends are up. You will find that if you hold your trades a little longer than what you normally would, a lot of those trades are going to get bailed out. Not saying they're great trades, but you have the power of the primary trend on the backside. Buy enough time on these things. You can hold through some pullbacks as long as they don't stop you out on a technical basis. Let these work. Nubank, all-time high. Congratulations to those of you that own it and have held it. Big win for us for those Octobers and hopefully for January as well. Waystar, Another shares trade that we were able to grab. Consolidating up here right underneath our second price target at 27.50. There's no entry here. We talk a lot about continuation fractals inside of TTI and how we use them to our advantage getting into strength. This is a classical continuation fractal. The difference, though, is that most people attribute continuation fractals as automatic resumation of uptrends. One trick you can put in your book is looking at how much white space is in between the fractals, or within the fractal, excuse me. If there's a lot of white space, meaning there's a lot of chop, the continuation fractal, less probable to continue to break out. A tighter high and tight, where there's very little white space, higher probability that it will continue its breakout. This is statistically proven. I'm not just pulling this out of my ass. Way right here is not a high and tight. Not saying it can't continue, but it's not something we would want to add into with high amount of conviction. What we're going to wait for is the 27.5 price target and an opportunity for a consolidation range to form, just like we did here, and then own the resumation of the uptrend. A nice trade, currently up double digits in shares. Nothing to do here except sit here and wait. The next one, ATMU. We initiated on ATMU as well. Has not done a whole lot for us since we opened it, but no reason to get bored and close it. We've traded this multiple times this year as well. We originally owned it off the 25-20 area. Myself and I don't know anybody else that held it through the consolidation range from early March through early August. But there's an opportunity for us to continue to add in here above 34 bucks, 35.5. It's working. Let it continue to work. Don't try to outsmart the market. That's where most people get into trouble. They try to outsmart everything. They want to time every top, time every bottom. There's only two types of people that can do that, liars and marketers. Generally, they are the same person. Let this stuff work. SharkNinja, one of my favorite trades we've taken this year. This is a high and tight. Look at the difference. I'll talk about that in a second. We originally entered this off the 54 area break. We added in off of the ascending triangle breakout. We caught the gap up, both earnings. Both earnings, we caught this gap. And now we're looking at a potential resumation of uptrend after a continuation fractal is formed. We were just talking about what does it look like for a there, that should work. There we go. For whatever reason, my $250 studio mic likes to just randomly turn off. I can't figure it out. It happens in Discord as well. Should work now. SharkNinja, continuation fractal above 91,592 on a close. We don't have to wait until the $100 price target gets hit. Good example of continuation fractal with very little white space. We're almost done with this, and then I want to show one trade that we just put on yesterday and are continuing to put on today. VIK. Trade that we put on and is just currently doing nothing. A great example of not wanting to add in until there is some sort of positive confirmation. VIK is not something we're going to want to enter in until we're up and over previous all-time high up near 37. It's not necessarily something we want to close entirely, but this is not working the same way that we had expected it off of the 32.88 33 area pivot. While it did hit price targets, it is stalling out. This is not something we're going to want to add into. So keep that in mind. We don't necessarily add into everything. We need conviction to add it. Need to have logical areas to risk on and risk off of. We need an area to stop out if it doesn't continue to work. And then the last one, GEV. Holding up relatively well today. Here's one that we opened up a couple of days ago off of the pullback. Just now starting to find some sort of momentum here off the 183. We like the 183 base. This is what I mean by understanding the setup that you have. 4.67 ADR. This thing has not even been around long enough to have a 200-day moving average. For those of you that don't know, GEV is the consumer appliance portion of General Electric. General Electric split into 3 different companies. GE is now aerospace and defense. GEV is their consumer appliance their line. GEHC is their healthcare. We like this above 183 for a potential price target up and over $200, somewhere near 205. Currently owned it. We're just going to sit here and wait to see if it works. We will stop out on a close if it does not continue to break range. We're not afraid to stop out for losses. The worst thing you can do is hold and hope. You don't want to do that. As of right now, we're not down on GEV. It's just not doing a whole lot. Okay, so that's the Future Leaders Report. I'm going to let you look at it one more time. If you're over on the market research side of TTI, you can read through the actual trade ideas that we posted, the ONON, the PRM, etc. This particular scan, like I said, has been one of my favorites this year because it's consistently given us the biggest wins that we've had. I mean, ARM was on this list, ARM, multiple 1,000% winner. SharkNinja ended up being an incredible opportunity when we grabbed it back in late January. VLTO was good. A bunch of these names continue to show up on this report as well because guess what? Strength begets strength. These types of stocks continue to lead, right? So I want to shift gears really quick. And although this has nothing to do with future leaders, I do want to point out that the Bank of New York melon trade that we put on yesterday and are continuing to put on today. This is an awesome opportunity to own a bank stock breaking out into all-time highs. This has nothing to do with the Future Leaders Report, but I feel the need to say this because there were a couple questions on the market research side yesterday that I'm addressing now. We like this trade specifically for 3 reasons. Financial-related stocks, if you're not aware, are breaking out and continuing into all-time highs. Last January, when we were buying JP Morgan, a lot of people were telling us we were crazy. There's no way financial stocks were going to continue to go up. It's, market's about to roll over. How dare bank stocks go up? Commercial real estate, you know how it goes. And JP Morgan, when we entered it at 170, is now a $220 stock. Don't listen to people because most people don't know what they're talking about. Financial stocks are continuing to show overperformance on both an absolute and a relative basis. So that's number 1. Number 2, Bank of New York melon in particular, breaking out into all-time highs, gives us a technical setup that we love to play. There's no overhead supply that we need to worry about. 64.5 and above is good grounds for us to be long. Below 64.5, we can have the conversation about stopping out. We're targeting $80 to $82. We have an upward sloping 200-day moving average, and we have a very bullish momentum regime. And I even wrote it in the trade report, a strong bullish momentum regime that goes back to Q3 of 2023. It's a little bit slower of a mover, which is why we went out and bought a lot of time on this, but this is the next big all-time high breakout in a large cap bank stock. A lot of these things have already broken out into all-time highs. This one is just now joining the party. High conviction trade here on those Januaries. Number 3 is because of relative strength. If you look at BK and you put it against some of the more well-known names, Bank of America, Charles Schwab, Wells Fargo, Bank of New York melon is outperforming. So against a basket of its peers, BK is outperforming. So if we know financial stocks are breaking out to all-time highs, we have the technical setup that we love to trade with all the variables telling us to go long, and it's showing relative strength against its peers, we want to own it. Screw what everybody else says. And this went out today in the newsletter. So if you're not signed up to the free newsletter, go sign up for it. TradingInitiative.com/join-newsletter. Worth an opportunity here. And as a matter of fact, if we pull up the options chain here, you can see there's a significant amount of volume and open interest on this particular play already. So we were able to grab the 75s for about $1 yesterday. They're currently going for about $1.15 to $1.20, so we're slightly up on this play. But when we were looking at this yesterday and we were like, listen, we want to get this stock, but what should we really be targeting? We looked at the closer, the Decembers, we looked at the farther out, and for whatever reason, there was a lot of volume on the day for BK. And then we went back and did some detective work. Hey, we're not the only ones that like this stock. They're front loading this on the short term in the Octobers. 1.37K, that was volume yesterday. They're buying it on the long term, the 75s. Whoops. There's something there. With a 3.55 IV and a 43.1 IV rank, there's a good chance that this stock is going to break out and implied volatility is going to fly upwards, which is why we want to own straight calls. We'll get paid two different ways. We'll get paid from the directional breakout, and we'll get paid from the potential for implied volatility to expand. I'm stoked for this play. I love trading bank stocks when they work well because most people hate trading them. And I think that's part of the reason why there's so much edge in these bank stocks this year. Once again, some of the bigger wins that we've had this year with JP Morgan, Corebridge. This came directly from our IPO scan as well. Check that out back in January. These are monster moves on these bank stocks that nobody wants to own. That's fine. They don't have to. We will. We want to own these. Okay, so that's going to wrap it up. If you have any questions regarding, once again, the Future Leaders Report, leave them in a comment on the report itself on the market research side, and I will reach out to you, or I will not reach out to you personally. I will respond to them. We're in a bunch of these trades already. Do not try to do too much. Let the market do what it's going to do. Don't get freaked out about interest rate cuts. We just talked through that a couple of days ago. Go read that newsletter if you haven't already, etc. Right? We've had a great year. Let's continue to have a great year. My name is Hamilton. I'm here with the Trading Initiative. If you like this type of content, please